Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market wrap-up for July 23rd. We are right in the middle of earnings season, as we all are very much aware. A fairly uneventful day in the market, unless you were the financials, who were very strong, or crude oil, who had quite a bit of a sell-off. We did have Alphabet Inc. / Google report after the closing bell today, and they did beat expectations. And when I checked here a few moments ago, they were up about 4% over in the after-hours trading. So look for them to maybe start a little bit up tomorrow from the sounds of things. A couple other interesting things that happened in the S&P companies. Halliburton reported and gapped down on a report that traders were not all that interested in, while Hasbro went the other way. Big solid gap to the upside as investors seem to really like what they saw over in Hasbro's earnings. Going into tomorrow, we do have quite a few earnings on the docket in the S&P 500 going into tomorrow. Biogen, Ameriprise, Eli Lilly, Lockheed Martin, 3M, AT&T, to name a few. So big day for earnings, as this entire week will be. About a third of the S&P 500 companies are reporting their earnings this week. So this is going to be this moral of the story this week. That is for sure. So of course, make sure you're staying on top of the stocks that you're following for their earnings reports. These can definitely move the markets. There is no doubt about that. Really quickly, let's just revisit the big names that we have coming out this week. Of course, we have some huge names coming out this week at Amazon, Facebook, to name a couple. Chevron, obviously Alphabet Inc. coming out tonight. Intel, MasterCard, Visa, Verizon. So some huge companies are coming out this week too. So make sure that we are staying on top of that each and every day. Relatively uneventful, like I said, day in the market, unless you were financials or crude maybe. Not a lot changed pattern-wise around our broad markets. We continue to hold kind of that breakout point. We did have some buying in the NASDAQ. Tech was probably the second strongest sector going into today. So we're continuing to hold that, really kind of hanging out the same place we've been spending most of the last week, kind of sitting on that old breakout point within the NASDAQ right now. Very similar for S&P. I broke through that 28 and just kind of hanging right above that. We did see a little bit of a doji form here on the Dow Jones today, so maybe some buyers will be enticed by that. And of course, at least to me, the very interesting pattern that we have still in the Russell as a potential cup and handle pattern remains pretty much looking very much like it has these last several trading days. So not a lot changed technically within our broad markets over the course of this past week. As far as our sectors go, now one thing that's kind of interesting, looking at the materials sector, we're kind of sitting, we've really been struggling and really not been all that enjoyable lately, at least for me, in the materials sector. But we are kind of sitting on that trend line. That I'm not loving that, but it is interesting. Of course, we're below our 200-day moving average, so I still am not personally very interested in materials, but we are now approaching that trend line, so definitely somebody might be, that's for sure. Still in our same trading range within our energy sector. I've certainly had a weak day today with crude selling off like it did, but still very much within that trading range that we found ourselves in last week. Our financials, very strong day, closed at resistance at previous swing high with a little bit of overhead just south of 2850. So watching how they perform here, I really thought that was a very solid. Obviously, it's a bullish candle with as big as it is, but pushing right back through that 200-day moving average like it wasn't even there. I certainly interpret that as a little bit of bullish commitment personally. Unfortunately for industrials, who we talked about last week, they had been struggling at their 200. We did not see that same conviction here today in the industrial sector, as they kind of gave up, at least for now, and quit trying to push it through that. So definitely quite a bit of selling going on within that sector here today. Technology, of course, as we looked at the NASDAQ, no surprise that technology ETF looks very, very similar as we kind of hold that breakout point. No doubt about that. Staples kind of continuing their slow and methodical grind back up to their 200-day moving average. It's not been very exciting as this rally over the last couple of months, but it has been a rally, and it's just been kind of a slow creep as it's working up and up and up. So we'll see how it responds at its 200-day moving average. Utility sector, kind of yucky to me after a strong run and a deep pullback and another nice little run. We're kind of somewhere in the middle right now between support and resistance. I'm never a huge fan when we're stuck in the middle personally. Interestingly, they did kind of come down towards their 200-day moving average and had a little bit of an intraday rally off of that for whatever that is worth to you, but really kind of smack dab in the middle of support and resistance right now. We may have an interesting little situation on our healthcare sector. Much like tech, we've kind of been hanging out on that old breakout point, but we did kind of see a little bit of upward momentum here today, so a little bit of oomph behind that. One thing that's kind of interesting to me whenever I'm looking at a chart is, how much room do we have overhead? And when we're looking at the healthcare sector, there's really not a lot of resistance for quite a while. And so while I don't know the future, of course, I always like when there's not things in my way as a trader. That's for darn sure. Real estate also sold off back into that old breakout point here today. But we did form a little bit of a hammer candle as we reached that old breakout point. So really the same pattern that we've been looking at really over the last 4 trading days is really about the same, testing that breakout point. We had a very strong day Thursday, sold off on Friday, and certainly not a strong day, but a little bit of rally off of that low. So that is certainly an interesting pattern. We'll watch to see if that support level is going to hold for us for our real estate. Not a great day for the metals. Is kind of pretty much what we almost always say, it seems like. Gold down, silver down, continuing their long-term downward moves. Natural gas also down here today. Same with our energy or our USO, as crude really sold off quite a bit. So quite a bit of selling over there. Same song and dance too for our dollar, kind of back in that same range after we worked our way back to it on Friday. A little bit of bullish activity today, but really pretty much in the same range that we were when we last met. So it should be an interesting week in the market. We do have quite a bit of earnings, and they are always exciting. And we've got some big names. Those big names can really push their sector or industry or even the broad market. So they will definitely be something that we're all keeping a very close eye on in the weeks, certainly this week, but next week we'll have a fair amount left over as well. So make sure you are double checking your earnings date, taking it into consideration for all of your